Good evening, Doc Severson here for the TheoTrade report for Tuesday, May 1st. We'll start off with a chart of the spiders, which is the ETF of the S&P 500. There's about 15-16 minutes to go before the closing bell here on Tuesday, and I just want to talk through what's happening on a larger time frame scale. So I want to focus on the right-hand side of the S&P 500 because we know what's happening on the left-hand side. The left-hand side, the monthly chart over here, the weekly chart in the middle, we're seeing this massive consolidation. It's about a 300-point consolidation. We see more detail on the daily chart as we're kind of vectoring in on this enormous triangle with lower highs, higher lows, another lower high, another higher low, and then what printed yesterday was another lower high, and I felt that that was going to be a very dangerous signal if we saw that lower high, and it was much more likely to roll over. However, what we've seen in the last couple of hours at the end of today has been today's candles turning into a hammer reversal. Now, we do have Apple earnings coming up in about 15 minutes or so, so we'll bring those to you live when they do occur. We also have ADP private payrolls tomorrow morning. We have the Fed report tomorrow afternoon, so the Fed policy report. Nobody expects anything to change with the interest rates, but anything could happen as much as the narrative behind it. And it's especially spooky when you start to look at the amount of Fed speak, the number of Fed speakers that are lined up to grab a microphone on Friday. It's almost as if you think they've got something to explain. So keep that in mind as well, too. And then, of course, Friday morning, we have the non-farm payrolls report. So the big jobs report comes out this Friday. Okay, so back to the S&P 500 chart, and really pretty much any chart that we look at from an index perspective is about exactly the same thing. We're showing this great amount of coiling. So this is almost like winding a spring up tighter and tighter and tighter. And this is very normal price action after we've seen this exhausting move to the upside that finished off in January of 2018. So we got into an absolute exhaustion cycle down here at the beginning of 2018. The deepest one that I've ever seen, especially at least over the last 20 years. And so it stands to reason we would have an extended consolidation from this. But now that that consolidation has occurred, it's done its job and it's just about ready to release. So the big question is, which way is this going to go? Every time we seem to have an edge, every time it seems to appear to break higher, we end up printing a lower high on the S&P. Every time it rolls over and it appears that we're going to head for a triple bottom or worse, perhaps an undercut or even deeper than that, we print a higher low. Higher lows. So we have lower highs, higher lows. We just keep vectoring in to the apex of this triangle. And I believe that the eventual breakout from this is going to be stunning. Now, just for some historical perspective, I want to go back to 1987. So October of 1987, I want to show you something that's relatively similar that we have. So I'm not bringing this up to create some kind of FUD, but what I'm trying to illustrate is that how patterns similar to what we're seeing here have been seen before, and sometimes how they work out, especially after a long, long run to the upside. You can just never be sure. So in 1987, during the summer in August, we had a similar, this was about a 10% correction up at the top. And then we appeared to be, the S&P appeared to be breaking higher out of that. And then all of a sudden it got thrown underwater, and then 1, 2, 3 days of selling as we broke that neckline, and then it was all over. So here's where the damage really occurred. Now, I'm not trying to analogize today's current move with 1987 and say, well, see, it's the same thing. But I'm just trying to say that from something like this, where clearly, as the price broke into a new high here, clearly everybody let down their guard and say, well, okay, that correction's over. We're breaking into a new high. It's over. And so as soon as they buried that correction, it started to sell off. The thing that you always have got to figure out here is who is going to get hurt. Who's going to take it on the chin for any particular move? And in this case, it was quite clear that the bulls let down their guard on this one. Everybody became extremely complacent as the price broke into new highs and formed a higher high. And then it was all over from there. Once that complacency hit, it was all done. Something else that I want to bring up as it relates to the S&P 500 again is the expected move. After 2 days, we've already hit the expected move for the entire week. And this is very common. We're hitting that expected move on either side with regularity. And not just hitting it, but normally punching right through it in a very few number of days. It's very, very common right now for us to hit one side or the other of the weekly expected move after about 2 days. And once more, this is an evidence that we're seeing this realized volatility is actually much, much higher than what's happening in the implied volatility world. If we go back over here to the VIX futures and take a look at that, we're hardly getting any movement whatsoever today. The volatility indices are absolutely asleep right now. There is no sense of risk in today's market. All right, Apple is finally out with its earnings here, so we had to wait about 30 minutes for them to release. And it's kind of a mixed bag right now because they beat at 273 a share versus 270 in terms of bottom line, but the top line was just a little bit light. So again, a mixed bag. However, the street so far is giving them about a $6 boost to the upside after a few minutes here. So we'll see. Anything can happen between now and tomorrow morning as the markets had a chance to digest and read between the lines and react to Apple's earnings. And of course, tomorrow morning, as I said, we have ADP private payrolls, which sometimes can foreshadow the Fed number. And then, of course, tomorrow's big event is the Fed policy release at 2 p.m. Eastern, 1 p.m. Central. I'm going to end up today's report back on the S&P chart where I started, and I would say there's a very, very good chance by the end of this week that we are going to break this range. So everything has been higher lows, lower highs, higher lows, lower highs, lower highs, higher lows, all the way along here, and I believe that we will change that in the next few days of market action. All right, folks, that is it for today's report. Thanks for listening. We'll see you tomorrow.